can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
All right. Good morning, everybody. Happy, what day is it? Oh, that's right. It's Friday. That's right. Welcome to the morning show here on Stock Market TV. A bit of a different show today. JC, if you watched the show yesterday, you may have noticed that he was powering through. He was a great sport, but today he has no voice. He said he cannot talk. So no JC today. But you got me, you got Strazza, you got Alfonso backstage. And it is Crypto Friday, which means we'll have Louis Sykes on in a few minutes to talk crypto with us. We'll have Matt Warder on this show. Ironically, that JC is not going to be here when he specifically asked for me to get Matt Warder back on the show, talk mining, metals, commodities. I did that. He's going to join us today, but JC is not going to be here to partake. So bummer for him. But we got a lot to discuss. Obviously, there is some shenanigans happening overnight in the Middle East, hitting markets this morning. We'll talk about Netflix. Obviously, we'll talk about that. That'll be the story of the day for me, at least, is Netflix. I know Steve has a lot more failed tops. I think he shared a couple days ago. More failed topping formations on his mind. So yeah, I guess it will be a bit of the Strazza show today. I guess that's the deal. So yeah, okay, we got me, we got Steve, we got Louis, we got Matt Warder, we got Alfonso, maybe if we're lucky later on in the show. So a lot to discuss. Let's get started. Roll my intro. Where's Steve at?
Wow. What a special treat we have today. Special Friday.
Oh, yeah.
Strazza Show Crypto Friday edition.
A lot going on here.
You seem pretty excited about Netflix.
I'm wearing red in honor of the overnight futures markets. No, I'm not. But
Spencer, I think we're flipping it green here.
Actually, you know what? As I look, we are green.
Let's see here.
Oh, well.
Well, let's talk about that. Bitcoin, big move since we last spoke. Futures, wow. Yeah, if you look at S&P, the E-mini futures, we're flat right now, but
amazing.
Huge lower shadow. Is there data? Like, what's the talk this morning?
Well, yeah, there is data. The data is a missile.
So we sold off on Israel last night.
Yeah.
And they're coming out. It's only 8:35, but trying to reverse it here this morning. That's what I'm seeing.
Yeah.
Bonds higher.
Crypto higher.
Yeah, listen, Bitcoin's made a nice move. We'll see. So, what's the dollar doing? Okay, dollar down a bit here. All right, interesting. So, war headlines are all the talk this morning. Netflix big earnings report was out last night. I believe still lower on the report. And there was a big move from gasoline and crude oil, which has completely been retraced. If you see like the long lower shadow in the S&P 500 futures, crude oil is the opposite of that. Long upper shadow flipping red here this morning. Same deal with gasoline. So that's interesting. The war moves being completely undone, and we haven't even opened here this morning, at least in terms of the equities market. So why don't we run a bumper? We'll talk a little bit about some failed tops. Then you can talk about Netflix and earnings. And then what? We got Matt at 9 o'clock, Matt Warder.
Well, we got Louis coming on before that. But yeah, let's do a little bit of a state of the markets, and you'll have the floor. Or is this more of a? Would you say this is more of a Strazza spotlight? What would you say?
It's going to be. It doesn't really matter. That's for you, sir. Okay. But we're just going to talk. So if we look at some of these charts that we ran through the other day,
Yep.
right? Oh boy, hold on. You mentioned the failed tops already, I heard.
I think that was a band. Oh, that was the four tops.
Throw this guy up. So I just dropped one in the chat. While the pattern that seems to be getting all the attention and that we've talked a lot about is these failures at the prior cycle highs. Fonz, why don't we flip through some of these failures at the prior cycle highs, starting on chart 17, right? I know, I'm moving all over.
Yeah, you're moving our charts around, man. Just hop into the deck and do it yourself. All right. What is this? What do we got?
This is the equally weighted indexes, S&P 500, NASDAQ 100, back below those former highs. That's a really big deal. When you zoom in, though, these are weekly charts, right? And we're seeing this across the board. However, when you zoom in, the most resilient areas, they're forming these short-term tops, some at these prior cycle highs, but the strongest ones are going to be failed tops. So let's look at Bitcoin, actually, as an example.
First, do you want to explain what a failed top even is? I feel like we talk about it enough, but let's maybe explain what that is.
A failed top is a continuation pattern. So we have two types of patterns at the end of the day. We have continuation patterns, which resolve in the direction of the underlying trend. And we have reversal patterns, which resolve in the opposite direction of the underlying trend, right? So a top is typically a distribution pattern or a reversal, right? Where you have some sort of uptrend coming into the top, some sort of cresting action. There's that word again.
Big word.
That breakdown. The problem with that is that reversal patterns, by definition, have a lower probability of completing, right? Because trends persist. And if a reversal pattern is valid, then that means it was the end of a trend. Trends tend to continue, not reverse. So what we see a ton, typically in bull markets, environments exactly like the one we're in now, is these nice tops form, and everybody gets all bearish on a couple months of distribution. And then all of a sudden you get some sort of shake, and then they go higher, and they absolutely fail. And these tops end up not being tops at all. They end up being continuation patterns, right? They're just consolidations within uptrends. And in the case of Bitcoin, I could draw up the chart showing top after top after top off of the lows from 2022 that have all failed as this, current bull market has been running its course. I don't think this one's going to be any different, right? And it's going to resolve at a major level. We haven't marked the chart up like this too much lately because we've been really focusing on those prior cycle highs. So where this last top is drawn in the upper right, that's printing right at the prior cycle highs. If this top fails, we got a little shake, I think, over the past few days, really undercut the lows from a month or two ago. If this fails and we start ripping higher, you absolutely have to be involved. This top's going to be just like all the other tops drawn here. It's going to be a failed top. It's going to be a continuation pattern, and we're going to want to be long. So I think we need to be ready for that. Also, Spencer, here's the way I'm thinking this week. If you're short, what are you looking for to cover? You want oversold
Are you talking about Bitcoin or just in general?
Risk assets. You're short stocks right now.
What would I be looking for?
No, you're covering.
Is that like a hypothetical? Because I don't know if I have an answer.
Right. If you're short right now, you're trading a counter trend move. You're probably aware of that. Are you waiting for an oversold reading in a bull market? How much more downside are you looking for? That's kind of where my head's at. Like, I think you're kind of pressing it here if you're not covering your shorts. So,
I mean, I'm sure there's a good target or two out there if you look. I haven't done that, but
sure. I guess my point is RSI in the S&P is low 30s. Depending where you look, some of them are oversold. RSI doesn't typically get oversold in a bull market. XLK 34. So I just think at least over the super, super short term, tactically speaking, we're getting a little bit long in the tooth here on this corrective action. So I would expect at least a little bit of a, reprise here from bears, some sort of reversal, a couple green days. And I think we're going to be looking at more and more of these potential tops and saying, oh, wow, that was a nice failure, right? And these could finally be some good entries. I've been sitting around for 4 or 5 weeks now saying, not finding many good entries for new long positions. I think these failed tops are going to give me some nice opportunities in the coming days and weeks. That's all I got for State of the Markets. I want to continue the crypto conversation with Mr. Louie.
Okay, so we'll save that for Louis when he comes on, and I think he'll be on. Is he on my calendar? Yeah, he's on my calendar, so I think he'll be on in a couple minutes. Let's talk. Oh wait, no, never mind. Okay, you want to talk Netflix before that?
I would love to talk Netflix. Yeah,
we should talk about Netflix here. It's sort of the only big report this week.
Cracking down on password sharing can only spur so much growth, I guess.
Well, yeah. I mean, let's talk about that because I have thoughts. So let's get to the numbers here on Netflix. Basically, across the board, the backward-looking numbers were good. The earnings per share, $5.28. That beat the estimate of $4.49. Revenue, $9.37 billion, beat the estimate of $9.28 billion. Net new subscriber additions, 9.3 million. It blew away the estimate of 5.1 million. So the numbers that were looking backwards were good. The numbers that look forward were not as good, not as rosy. They said that their revenue for the current quarter that we're in right now would be just a smidge below the estimate. They also said that net new subscribers would decline sequentially, so quarter over quarter in conjunction with typical seasonality. But the real headline that people are talking about here is Netflix said this is going to be the last year that we break out our subscriber numbers and we talk about them in our quarterly reports. We are not going to do that anymore. We are just too mature of a business to be talking about net new subscribers quarter after quarter after quarter after quarter. And also the favorite ARPU, the average revenue per user. We don't need that no more.
Oh, they're taking that away?
They're taking the ARPU and they're taking the new subscribers away.
Yeah. We've talked about this kind of thing on here before, right, Spencer?
We have, yes.
When things are good, the reporting gets increasingly transparent. They want to break out more and more numbers. They want to show you where the growth is, right? Brag about things like the subscriber additions or ARPU. I never thought would be taken away. That's a big metric. That's one of their KPIs. So that's a little strange. And then when things aren't so good, the reporting gets less and less transparent. And all of a sudden, these key performance indicators that the street, knows and loves, the company starts to tell you, oh, that's not important anymore. Look over here. So I don't know. I think I've probably been wrong on Netflix in terms of fundamentals for a while now. I just think it's such a crowded industry. And while, yeah, they dominate it and they're doing far better than any of their peers, thank God, it's just a tough place to be.
I think if with a lot of things like this, how you interpret this will depend on your position and your bias, and I think this can go either way. If you want to think of this as the fact that this is proof in the pudding that Netflix is a maturing business, and they've clearly won the streaming wars. And they're only going to grow so much from this point forward, and they're entering a different stage of their life cycle. Then you don't think of this as that big a deal, right?
Do you ever really win the streaming wars though? Like you can't just be like, oh, we're in a comfortable position now. Like we could take our foot off the gas. It's not how this industry works. Somebody will, eat your lunch. So,
yeah,
I don't know.
That's true. I think if you look at the stock price compared to the other ones, and I think if you just look at the subscriber growth, I think it's pretty clear that there is Netflix and there's everybody else. Right?
I'm not disagreeing, but I'm saying you got to keep working hard at that. It's not like some moat where everybody else goes away. It's not like Uber winning ride hail.
Yeah. Okay. So they are winning. Maybe they didn't win, but they are winning. Clearly, they're winning. So look, you could think that, or you could think the other side, which is like, oh my gosh, are you kidding me, Netflix? You're not going to report the one number that everyone sort of hangs their hat on anymore. Is it because you know what's coming? Is it because you've seen the tea leaves?
That's exactly why. Nike did this with futures orders years ago. It's not a good look. It's probably fine. It's probably nothing.
It's probably. Wait, can we show those other charts, please? The Netflix, the new subscribers, please. I think we have slide 11, right? Just to put this into context, there was that one. Well, I guess there was two really disastrous quarters of subscriber contraction a couple years back, and they turned it around. They cracked down on passwords, this, that, and the other, new content, new shows, and they're pretty much back on trend, right?
Look up the ARPU now.
If you look at their revenue, which is the next slide, these are both from the WSJ. Look, they have advertising now, right? This isn't a secret. So these are some projections here on the right side of the chart, but this is Netflix saying we are entering a new phase of our life as a business. We are no longer purely focused on subscriber growth. We're focused on profitability. We're focused on monetizing in other ways. Don't forget, they're supposed to be working on the gaming stuff whenever that comes around. They're maybe getting into live sports, right? Or they are. So I mean, other ways of making money here, not just subscribers. So we'll see. But anyway, regardless of all this, the stock is down what? Yeah, wow, it's actually at the lows of the pre-market right now.
Yeah. I'm interested. I'm interested back below 500.
Back below 5?
Yeah.
That's a bit of a ways away. We're down 7% here. That would be another that'd be a nice drop. That'd be a big drop. I don't know if you're gonna get that.
Oh no? I don't think so. All right. What else? What else in the world of earnings?
A couple other small things, but the Netflix is the big one. Let's bring Louis on and we can talk. I know you want to talk Bitcoin. So it is Crypto Friday.
It is Crypto Friday.
We might as well play the Crypto Friday bumper. No, let's bring Louis on. I'll just bring Louis on. Louis, you ready? He's ready. Is that a black background? Whoa. All right.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Yo, what's up, guys?
What? Wait, Louis, can I hear you?
Can you hear me?
Oh yeah, I got you. Okay. Whoa.
Can you hear me?
You're like a floating face.
Can you hear me?
Yes.
Okay. How's it going, guys?
What the hell's going on back here?
I just thought I'd just take this interview in the void, you know? You know, a fan of this? I like just dark.
Actually, I think I like it.
I don't know. The emo charts were one thing. Now we got the emo background too.
I think I like it.
I mean, it's kind of on the eyes, you know. I'm more of like a dark mode sort of guy.
I wish JC.
I didn't think it was going to be this controversial.
No, I like it.
I don't like it. I don't know. I still have to think more about it. You're really shocking me this morning. This is different.
Okay, I'll bring the white background back next time.
No, this is better than that.
No.
Don't bring the white back, please.
We got to see what JC thinks about this. This is interesting. All right, Louis, tail tops. Are you picking up what I'm putting down? Throw up the chart for Louis. I'm sure he's seen it.
Is it that
easy?
I don't know if you guys heard, but apparently there's like this halving thing, like something to do with this reward or mining, or it makes it more expensive, or I don't really know. It's
wait, is that tomorrow?
This is the last day you're allowed to talk about it, so get it all out.
It is. They don't really know. It's expected to happen. Today or tomorrow.
Wait,
we all know that it's noise.
Can I ask a stupid question?
I'm being purposely facetious. We all know that it's noise. And so the big narrative, of course, is that, we are approaching the halving. So Bitcoin has a tendency to follow these 4-year cycles of every time there's a halving event that tends to precede a parabolic bull market. We all know. Can I swear? Can I say?
Sure.
we all know that it's bullshit, right? We as technical analysts, we focus on money flow, not narratives, not stories.
Tell them.
This entire halving is just completely bullshit. There's nothing about it. The more important story here is what's happening in risk markets. So if you're saying that the halving's important, then you're of the view that this tiny change in supply is more important than the
Well,
$130 trillion bond market,
you're,
than the $110 trillion equity market.
you also just don't
That's
understand the market, right, Louis? You're basically making the bet that the market's stupid. Market's a discounting mechanism. This isn't new news. We didn't just wake up this morning and find out there's a halving, right?
exactly. I mean, 93% of all the Bitcoin supply is already mined. So you got to wonder how much of a difference is this marginal increase in the supply gonna result in the price of Bitcoin. It's just complete nonsense.
Would it make sense for the miners to finally bottom here today?
I almost feel like it would. I feel like it'd be quite poetic
Yeah.
that it would be the sell the rumor, buy the news type of rally,
Yeah.
where Bitcoin miners have drastically underperformed in the lead up to this halving. And now that we're getting it, it would be quite classic to see miners begin to outperform here.
I think so too. And you're seeing some kind of potential failed tops there also. I'm just marking up the clear spark or clean spark chart now. But you can mark this chart up in a bullish way right now, is what I'm saying. Talk to me about Bitcoin.
Yeah, I was briefly watching well while you're talking about these failed moves. Bitcoin has a tendency to, you know, fail to break down from these important support levels, and we've seen that all throughout this entire bull market where a floor has been set and Bitcoin has failed to break down and we just rip higher. So the question that's on my mind is whether this is going to be another one of those cases where we have set a floor around 60,000. We set a floor around the mid 20,000s in 2023. Then, following the launch of the ETS, we set a floor around 40,000. Is this going to be another case where we set a floor around 60,000? I'm not too sure, but what I do know is that if you do want to manage risk, we need Bitcoin to be above 60,000, which as of the time of this recording, we briefly broke below there, and now we're trading well back into this range.
Throw up the clean spark. Chart 1. Something like this. Take a shot for a trading vehicle.
I mean, I try to I put on a long ETH trade. I think it was a few days early because I got whipsawed out.
Yeah.
It's like this failed breakdown setup is materializing, and you see the setup play out all the time in crypto markets where you'll often get these failed moves near important inflection points. It's such a classic setup that happens all the time, and in fact, it's probably my favorite setup to trade in this asset class.
Yes. The fail, the shake and go.
Yeah, absolutely.
Key levels, we're not the only one that sees them, right? So there are larger players in markets, and trust me, it's worse in traditional markets. But you do see it in Bitcoin and even others, less in the smaller ones because there's less institutions. But as more and more big money comes in, expect more whipsaws and more shakeouts because they see these levels too. And they know that, trades are triggered there, stops are triggered there, right? And they hunt them out. And you'll get some real volatility around that level. And then you tend to get resolutions or, the kickoff of a new leg off of these levels too. So maybe we get that. Maybe it happens today, tomorrow, this weekend, right? Sometime when we're sleeping. Maybe it happens next week, next month. I don't know. But the shorter duration, the higher the odds are that these patterns fail, right? If this is, with waning momentum, just kind of ranging here for too long, then odds are better and better that it actually is a top. The shorter, the better. So I think, we've been up here, since early March. So Ethereum, you could see the shake setting up right there. A number of long lower shadows the past few sessions. Sure.
Yeah, and I think there's an argument to be made that there's no balance sheets in crypto, there's no discounted cash flow models,
Yep.
and so there's a high proportion of market participants within this asset class that are using technical analysis, and so more of these people are using these levels to set their stop levels, and so there's a higher amount of liquidity that can be accessed by these failed moves, and so I think there's an argument to be made that because of the increased use of technical analysis, that you do get these failed moves quite a lot in this asset class, and that's perfectly great as far as I'm concerned because they're really high conviction setups when they do materialize.
So do you trade the range here, or you want confirmation above 72?
I don't mind trading the range if you want to get cute. Um, I want to see legacy markets shape up a little bit more constructively before having any conviction on a break of 72.
Explain what you mean
Um,
by that. I think that's a great point.
yeah, so forget about the halving, as I was saying before. The
Yep.
more important driver here is what's happening in legacy markets, what's happening in the bond market, equity markets, currency markets. Take the dollar, for instance. There's still an incredibly strong negative correlation that exists between the US dollar and crypto assets. And so
Yep.
we've seen it, the dollar strengthen over the last few weeks, and crypto markets have come under increasing pressure in that tape.
Yep.
And so it's very hard to imagine a scenario where Bitcoin just melts up higher from here if the dollar is still if the dollar is still moving higher. And so you want to see the dollar probably subside. You want to see some of these failed breakouts that we're seeing in several important equity indices begin to correct themselves.
Yep.
And you really just want to see the conditions in equity markets really improving. We're talking a lot about how we're seeing a spike in the percentage of S&P 500 stocks that are trading above their 200-day but trading below their 50-day average. So the takeaway from that is this market's quite messy, particularly over short time frames. And so you want to see that really establish itself and clean itself up before having much conviction in crypto over the intermediate to long term.
Imagine that. You feel better owning crypto in an environment where equities are repairing this tactical damage. Maybe we're getting there. Maybe there's finally evidence of a tradable low, but you make a good point because since equity indexes started selling off a couple weeks ago,
Mhm.
it's only accelerated the downside momentum, right? So just this wick here this morning, even though we haven't even opened, the way that futures have kind of retraced their losses from earlier this morning and last night definitely stands out. If we can, end the day positive or green today, maybe that's the first sign of some sort of tradable low and the ushering in of a new environment where we can feel better getting long some of these
But the man on the TV said that there was like a World War III or like there was some Middle East. We don't just sell everything just because the man on the TV was quite scary today.
a lot of war talk. A lot of war talk. Yeah.
Louis, what about how Bitcoin or crypto more broadly has behaved in previous halving cycles?
Yeah, so we all know that Bitcoin um, has tended to trend quite well following these halving events. So every time Bitcoin halves, it's the start of a new bull market. That's the narrative. But I like to return back to the classic adage that correlation doesn't necessarily equal causation. And so it's just my argument is that it happens to be a coincidence that Bitcoin has rallied and began these new bull markets right after these halving events, because if you overlay this with equity returns, if you overlay Bitcoin with, say, corporate credit, with treasury yields, with any form of liquidity indicator that there is,
Wine go
PMIs.
up everywhere, right?
Yeah, exactly. And
Right.
so it just happens to be a coincidence that Bitcoin is moving higher following these halving events because conditions have also improved in liquidity and equity markets following these events as well. And so this correlation that exists between Bitcoin and the halving, in my mind, it's more of a spurious correlation, and the real driver is what's happening in equity markets and the legacy markets.
Okay, wait. Let me ask a dumb question here. Can you quantify an epic,
An epoch.
an epoch, however you say that word?
Uh, it's just the period of between the halvings. So in
Oh,
Bitcoin, it's every
is
4
that
years.
is that what the crypto people say?
It is. I
Oh,
mean,
really?
crypto people
Oh,
they like to sound more smart than they really are, and
okay.
so that's
What,
just another way on how they do this.
they can't just say like um period or some other more normal
It
word.
has to be epoch. I feel like epoch sounds grander. It sounds
Okay,
more dramatic.
fine. um, another dumb question for you. How is it that no one actually knows when this thing actually happens?
Because it doesn't just happen every 4 years, and so there isn't just a line of code that says, "This is gonna happen every 4 years." It's after a certain amount of blocks have been mined,
Mind.
and so,
Okay,
we can approximate that, but we don't know the exact date, and we
got
can't
it.
predict that. Yeah.
So it happens when people will know when they look up one day and their rewards have been cut in half.
Yes, yeah.
Okay, cool. All right, today I learned. I didn't know that. All right, Louis. Crypto, like everything else, seems like short-term correction here, but nothing to freak out about, right? All normal.
Yeah, I think the longer term trend is still higher, and so even though we've seen this near term weakness, that doesn't invalidate the longer term uptrend. And even if we do see more weakness materialize here in the coming weeks, in the coming months and quarters, I think that those are almost viable opportunities because we're still setting up for this breakout, this ultimate resolution higher in Bitcoin. And so if you do see weakness materialize, which we have certainly seen weakness materialize down the cap scale and into the altcoins, a lot of those are really quite viable opportunities, at least in my eyes. And so I've really got a shopping list and just looking to find favorable opportunities should they present themselves.
Yeah, that's a great point, right? Moments like now are the time when you make your shopping list and then go and then act on it, right? Um, Everyone who sees a chart ripping higher and thinks, "Oh, I missed the move." Well, this now is for you. There is no move to have missed here yet, right? So it's a bit of a psychological thing for some people. Some people just hate chasing. That's you. Then I present to you the last few weeks.
Exactly. I think the key here is just don't get shaked out.
Yeah, always, it goes without saying, always have an exit plan, whether it's a physical stop, whether it's a mental stop, whether it's a percentage drop, whether it's a time situation, a time stop. Doesn't matter. There's a million ways to do it, but always have an out with anything that you buy. That goes without saying. All right, Crypto Fridays. Louis Sykes. Louis, anything else we did not cover here?
I think we're good. I think the big key takeaway here is the halving is bullshit. Just don't listen to it. It's just not backed by data at all in terms of its influence on Bitcoin cycles. And so follow the more important story here, which is what's happening with the dollar, what's happening with fixed income markets, what's happening with equity markets. That's more important, not this halving story.
Question from one hole in the chat. Can Louis comment on where in the world these crypto trades are coming from? Like, do we have data to see if they're coming from Russia, China, UAE, etc.?
What do you,
Just in general,
what do they mean?
like the
I mean, we can see where trades are coming from on chain, and so we can see a geographical split between different exchanges as well as people are transacting on chain. We do have that data. I'm not really too sure about its impact on the market per se, but we can break that down by geographical spread.
all right. Listen, guys, if you want to get Louis' research for real, the very first link in the description, the very, very tippy top, the part where it says check out a brand new crypto research is how you can sign up All Star Charts Crypto, get Louis' stuff delivered to your inbox, and get access to his premium content because he does really good work. And what he talks about here is just like a small tease of what he's doing every single week for AC Crypto. So
Hey,
Louis,
well, cheers for
you've
the
been
shout out.
crushing it. You've been crushing it. I've been meaning to talk to you all week but you've been crushing it on the work you've been doing, and keep it up, man. And we'll see you in a couple weeks.
Yeah.
5 weeks.
Probably.
I'm looking forward to it. I think, I'm really looking forward to coming to California. It'll be a great time.
It's gonna be good. I hear we're gonna have some tacos. I don't know anything about that, but it'll be good.
It'll be good.
All right. See you, Louis.
All right, Louis.
Cheers.
Later. All right. So good message as always.
I just find it so interesting that like the crypto guy is the one saying, look at the bond market, look at the stock market, right?
Louis been working with JC and I for almost 5 years now.
Yeah. Wow.
Louis was our first intern back when he was like a freshman in college. So the inner market stuff has been burned into his brain. It's also refreshing
Really?
to hear him talk about the halving the way he does, but that's also kind of been burned into his brain, right? By JC and friends. So I'm glad it's over and it's behind us now, but just be ready for whatever the next thing is, whether it's the Ethereum spot ETFs. There will be a new narrative that dominates as always. What you're not seeing though is at least too much about Bitcoin being some sort of war safe haven. You used to hear a lot of that.
Yeah, that's true.
Geopolitical issues. You would hear about Bitcoin. Oh, buy Bitcoin, buy gold, buy yen.
It goes back to what I said the other day, right? Everything they've ever told you about Bitcoin appears to have been a lie, or at least not true yet, right? Because Bitcoin is not a hedge against inflation. It is not a hedge against geopolitical conflict. What else did they say? It's not a diversifier. It's not the new gold. It's really none of those things. Right? It's just
So Brian
option on risk.
Apparently Brian's been watching CNBC, and this is what these guys, say. But trust me, while I hear you, it used to be worse. It used to be worse. And we talked the other day about this. We'll just reiterate. Not only is everything that they originally told you about Bitcoin turning out to be untrue, but thank God it was all untrue, right? Because it would never have become a legit asset the way it really has this year with the launch of these spot ETFs. So
I don't really care about that, but I just think like thank God that like Wall Street institutions came in here eventually, right? Thank God for like things like the CME with the futures and the ETFs.
They needed more regulation and more centralization and all the things we would never get involved. So
hell yeah.
Saying, thank God, because it is creating a massive amount of incremental demand. We talk about the fund flows on here all the time. You needed that. It's a form of legitimacy for the asset, right? Buy-in from all these institutions. So it's exactly what you want. That now this is the roadmap for any of the other cryptos that are ever going to, get really big. Solana, Ethereum are going to want to follow this Bitcoin roadmap. I'm excited for the next funds too, because I think that they're going to pay some nice yields, and they might even become preferred vehicles for people. So I think we've pretty much exhausted the crypto talk. Sean, you want to come on and talk options or something?
All right, we're gonna have Matt Water on. Let me just make sure he has the right link to join us. He may not.
We're gonna have a nice commodities conversation. Then we have a bunch of failed breakout charts that we will run through, just to reiterate, because we mentioned it so much at the top of the show today. So we'll just do a quick trip around the U.S. equity market and world, showing some of these big levels that we're watching. It's one of those times, right, where you make a list with a checklist of above or below prior cycle highs. And as we start to reclaim these levels, then you get the all clear signal that it's time to start adding new exposure, adding new longs, pressing the gas again a bit, because we've been sitting on our hands for some time now.
Yeah. How much cash do you usually have? Like your allocation.
I'm constantly adding, right? So my cash balance is constantly increasing
Yeah.
each month, which is nice to have. So I always have kind of plenty. I'm almost always deploying capital because my cash balance is always rising.
Right. That's good. Yeah. All right. Before Matt comes on, let's just do a couple things, a couple more headlines. Paramount is like your top gainer of the day outside of meme stock land. But there was a report that Sony has now jumped into the fray along with Apollo to make a bid for Paramount Global. So PARA continuing to trade with the M&A wins. We also had earnings overnight, or I guess this morning, from Procter and Gamble, and their numbers were a beat on the top. A miss on the top line, a beat on the bottom line. Their growth guidance looks like it was in line. You know, they raised their guidance for the year. That was kind of the only other big one on the earnings front. We did have Intuitive Surgical, which I used to look at a lot more than I do.
Throw that chart up. It's a nice
The
looking
ISRG.
Yeah, it's a nice chart. Look at that.
I suppose it's more interesting than Procter Gamble. EPS beat, sales beat. That's pretty much all I got on the ISRG front. I haven't even seen what it's doing this morning.
Look at that. Hey, failed tops. Hey, no.
Oh, wouldn't you know it?
They're everywhere. Right? This is Bitcoin.
Well,
This is Bitcoin.
Surgical, but yeah, I see your point. All right. We actually have charts. Matt Water sent us over a few charts, and we have Matt here. So let's talk metals. Let's talk mining. You ready?
Let's do it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's
Matt
going on,
Ward.
boys?
How you doing?
I'm great, man. Good to see you guys. How's things going?
We're bringing you on just in time for another rally phase from commodities. Is that right?
I mean, that's what we're hoping. This is usually a pretty sleepy time of year for commodities. It's kind of past restocking season for the bulks and those sorts of things. But China's sort of lull in activity earlier in the year has sort of reduced their stockpile levels, and they've been active in the market. We've had a little bit of a bounce here the last couple of weeks, so it's been pretty interesting. Of course, the rest of the sector, especially precious metals and copper, have been going absolutely bananas. So it's been a good year so far.
So I was hearing this morning, seasonally weak period for energy specifically, right?
Mm-hmm.
On us. That just makes kind of plenty of sense in the context of the recent price action, because February and March, if you just look at something like XLE or even materials, XLB, I mean, these things had win streaks that they've never seen before. Best in history in the case of XLB, I think. So a cool off, a little bit of digestion, some sort of corrective action here, well deserved and earned by these groups.
Yeah, for sure. And obviously, the geopolitical winds are blowing at the moment, so it's hard to, we can't predict those kinds of things and how markets are going to react. So, for the most part, we just kind of take those as they go. But yeah, typically, in between, end of March and beginning end of June, we'll see a lag in power demand. We'll see a lag in oil and gas demand until summer gets going in earnest. Driving season begins for real. People start going on vacation, and temperatures heat up. That's usually what we see typically at this period. So to see this kind of strength, in April is pretty exciting, frankly, from my end.
So when you buck the seasonal trend, that's when you get the best information from seasonality, right? So what Matt is basically saying is this is historically a weak period for these assets. If it turns out that they perform well, right, then the way the reasoning works is, well, then how are they going to do when they enter a seasonally strong period, right? So that's the way you kind of want to think about seasonals. Tell us how you approach just a day like today. My cat's kicking my desk furniture off my desk. How do you approach a day like today, or even the past couple of weeks now with the Israel stuff going on? A lot of volatility in crude oil, gasoline this morning. Do you completely ignore it? You have to be aware of it, but does it really impact your process at all? Tell us how.
I mean, I'm usually a seller of geopolitical events and those sorts of things. So, I'd be taking profits here just a little bit. But all that said, if we're starting from a higher base as we go into demand season for commodities that get consumed, I mean, not talking precious metals here, then we should be looking to buy here again, over the next month or two. That's certainly true, in my home sector, the coal sector, representing the AMR boys here today. Both met and thermal coal have pulled back here pretty significantly, with energy markets and with steel prices and with China activity. But we're getting into the part of the quarter where if people haven't restocked and they're looking at these prices starting to go up again, you may see kind of a rejuvenation of activity in the spot market for a lot of the bulks and for energy in general.
So let's talk more about coal.
Sure.
AMR is we run scans that measure performance off of like key cycle lows, and coming off of at least the pandemic lows in 2020. I don't know if there's a better stock performance wise in the entire broader market. I think it's AMR.
If there is, I don't know about it for sure. Yeah. And obviously, the capturing the beta of the move in coal prices is far behind us. And the sector has kind of moved into this new territory of, we're going to return, between, call it 5 to 50% cash flow per year, depending on, what market conditions are going to do. And that's just kind of going to repeat ad nauseum
via
for
buybacks.
the future.
Via buyback.
Yeah. And that free cash flow is going to be returned to shareholders either in the form of dividends or buybacks. We prefer buybacks, obviously, especially for companies that are kind of entering low float territory, like AMR is. You have real upside convexity, when you commit to the buyback like that. Consol CEIX is committed to doing that as well. I'm not super thrilled about thermal coal markets and gas markets here, at the moment, but I think if we kind of take a look in the rearview mirror, probably both of those have bottomed here, and we'll see how things progress as we get into the back half of the year, and these LNG export facilities coming online.
Matt, real quick, so we kind of touched on it. AMR, like, absolutely historic buyback. I think they've bought back more than a third of their outstanding shares over the past several years.
Yeah.
So what the executives at this company have done is nothing short of incredible. It should be a business school case study in the future. Why haven't all of their peers caught on? I know Consol has a big buyback program too.
Yeah.
How about the rest of them? Like, obviously this is the playbook. So, like, why aren't they all doing it? Do they not all have the cash flows that AMR has, or is there just another reason?
I think everybody's gotten the memo at this point in time, but depending on the company that you're talking about, the approaches to shareholder returns are a little bit different. For instance, Warrior Met Coal, ticker HCC, has really been the most resilient performer in the coal sector here over the last few months. And the reason for that is people are sort of wising up to the fact that they're going to bring on a mine that should be in full production by 2027. Okay. Will increase production by about 30%.
Oh, wow.
And that is starting to get baked into the share price. Now the flip side of that is, once that mine comes online, that company should be generating somewhere between $600 to $800 million of free cash flow, not EBITDA, but free cash flow per year. And obviously they're not buying back shares right now because they want to ensure the success of this project. Right. But I suspect, by the time that mine comes online, that's the avenue that they'll take, and they'll begin to sort of AMR themselves, around that point in time.
How about Arch Coal? We ever going to resolve higher out of this range here?
Well, the difficulty with Arch and Consol both right now is, I'm sure you guys have talked about the bridge collapse in Baltimore. Here over the past month or so. So both of those companies export through that Baltimore terminal, and that's the bulk of their honestly, it's the bulk of their free cash flow. So they're both making concessions here right now. Their Arch is trying to export through Newport News, Dominion Terminal Associates. They have a stake in that port there, but it's a much more expensive rail haul. So they're sacrificing margin to move tons. Consol's making similar arrangements, but it's just it's going to be tough sledding, I think, for both of those companies until the port facility is back up and running, probably by the end of May.
End of May. That's it.
Yeah, I mean, they're already starting to move bits of that structure. I drove up by it here the other day, and there's a big chunk of the middle of the bridge that's gone. I think they've dredged, or not dredged, but they've gotten they have shipping channels open to about 14 feet of depth, so they can get some of the container ships, some of the auto ships into Baltimore Port. Baltimore's a huge auto port for the East Coast. There's a lot of trade that goes on there, so I think they have clearance for that. There are tugboats that are moving ships in and out through that narrow channel. But in order to get to the point where you can load Panamax vessels, which is a depth of like 39, 40 feet, we're going to have to wait till, I think, end May for that to be completed. And Army Corps of Engineers, I've talked to them a bunch. They're optimistic that they'll be able to hit that deadline.
Where's your head at on uranium, Matt?
Uranium. Uranium has turned into a sector where I don't even look at the share price anymore. I've been owners of Cameco and the Sprott Physical Uranium Trust for a couple of years at this point, a little bit more than a couple of years. Yeah. And I've already taken profits on them. They're positions that are going to be in my portfolio for a long time. We're heading into. Nobody really talks about uranium seasonality, but it's very similar to other energy stocks as well. As power demand ramps up in the summertime, you should see, sort of a commensurate move in spot prices. Now, whether or not the same sort of torque that we've seen in the physical trust in the past is going to be able to be unleashed here in the summertime, that's probably a different story. But for now, we're holders, not necessarily buyers.
So you're not just here for this cycle for uranium. This is a mega trend. You plan to be bullish uranium for years.
I plan to be bullish uranium until uranium stops being bullish, and then I'll be, exit stage left, like we do most everything else. Sure. Uranium cycles, the fuel cycle for uranium lasts about 10 years. That's how long those contracts last. So we're just now getting to the point where utilities are coming into the market to buy up spot prices, and obviously they can't buy at prices that would put their suppliers out of business. So Sprott has bid up the spot price to a point where people can make money. I think we're going to stay at these levels for a while. There's the overall overshooting of demand depends on the pace of new builds and facilities, and so far that process is going well, but slow as it usually does.
So I can't help but notice the way that sentiment has shifted for uranium from the start of my career to now. This used to be an asset or an industry group that both sides of the aisle hated. You couldn't find anybody to say anything good about it. Not only was it bad and not clean energy, it was dangerous energy. There was one documentary after another about just how terrible all of the disasters with nuclear reactors have been. Now all of a sudden, both aisles love it. You got people like Elon Musk and other really smart people talking about how important it is, how it's actually clean energy, some of the most efficient energy as well. I don't like it though, as a bull. I don't like everybody kind of coming around. Do you ever think that at all?
Yeah, I mean, that contrarian instinct, I think, kicks in for everybody. But the thing that we have to sort of realize is that if we're going to, as a Western society, prioritize clean energy, there's really only one clean baseload solution, and that's nuclear. Now, the knock on it is that it takes 10 years plus to build a facility, and it's expensive, and those are legitimate concerns. Yeah. But there are companies like NuScale and Oklo that are doing really good work with small modular reactors in different formats, and I think that's probably going to wind up being the norm for new builds over the next, call it, 10 years, because you can scale a number of small facilities. They do take shorter amounts of time to build. The concern right now is, will we have enough fuel to run them? For NuScale, you require HALEU, high assay, low enriched uranium. There's really no supplier of that, in the market. There are a number of companies that can make it, but it hasn't yet been standardized as typical U3O8 contracts have been over the past few years. But from my view as a as sort of a card-carrying liberal. It's like if we want to solve the energy transition, you need zero carbon base load, and to me, nuclear is at the current standpoint the only real base load solution at this time.
It's interesting. Do you follow like the rig count? Or is new supply finally going to come online for crude?
Yes and no. I mean, for the U.S., like the rig count has been, flat to down for some time, and
Forever.
Really the story there is productivity. We've had this tremendous increase in productivity.
Yeah.
Part of that is, sort of, dovetailing on the massive amount of drilled but uncompleted wells we had a few years ago. Those brought production up into the forefront, and now we moved into these other areas that are productive, but don't have to drill quite as many wells to leverage that. Those wells are getting gassier too, so I think that's probably at some point in time going to inflect meaningfully. But what's that?
What does that mean?
The wells are getting gassier. So in the Permian, the biggest supplier of gas to the market, other than Appalachia over the last 10 years has been associated gas production from drilling for oil in the Permian. Okay. Because you don't just get oil, you get a mixture of oil and gas and water and other stuff, and you have to mitigate as much of those as you can. The Permian hasn't necessarily been able to handle all the gas that's come out of those wells. So they've had to flare a lot, over the past few years. And I'm not like super oil and gas expert or anything like that. But those, from my roost over, kind of overlooking the coal sector, that associated gas production is really what's kept gas prices down significantly for years, and has really been a thorn in the side of the thermal coal market domestically. So that dynamic I watch pretty closely, and as those wells have gotten gassier, even though the rig count is declining, we're still producing, a pretty massive amount. And now we have a little bit of pipeline egress that's coming on in the back half of the year for the Permian that should be able to, bring more oil and gas to market. We have the Mountain Valley pipeline in Appalachia that'll help debottleneck the Marcellus Shale a little bit. Sure. So we're going to see more gas coming to market here, ideally right around the time that these LNG export facilities kick on, so that so we don't have another backslide in in gas prices. But that's kind of been the dynamic in that general vertical for a while.
Before we let you go, I have to ask about precious metals. Gold, silver. You like what you see?
Gold, baby.
Yeah. Well, I mean, as long as we're going to spend money like a drunken sailor here in the U.S. and the rest of the global economies are going to try to outdo us, then gold and silver are going to have a place in your portfolio. The one thing that people have been talking about, I think on the tweeters and in my parlance, is how much the miners have lagged. And the thing you have to remember about miners is, they have cost pressures as well. The same sort of cost inflation that you have, at coal mines and iron ore mines and other things that go into the steel market, which has been massively inflated over the past few years. Well, gold miners are experiencing the same thing. Yep. And so the question is, will costs increase at a faster rate than the gold price appreciates? So far that's been largely the case, but we're moving into a period here where, especially if we add these ridiculous geopolitical tensions to the, already profligate spending, at the sovereign level. We're in a situation. I mean, I think obviously we're going to see, I think, gold 2,500 this year, but now I think we need to start talking about 3,000, 3,500 over the course of the next part of the cycle, because as of yet, like there's no end in sight to the uncapped fiscal programs, the CHIPS Act and the Build Back Better plan and the Inflation Reduction Act that we have here. Those are still, spouting money right and left. And on our side, it's going to take regime change to put the genie back in the bottle on that end. And I mean, we're seeing it in interest rates too. I mean, that spending is, how many times have we seen, interest rates go up, gold prices go up, the stock market go up, like everything kind of goes up all at once. It's been pretty amazing to watch, but I think you put up that chart there a second ago. The one thing I'd probably point out is that the platinum group metals have lagged gold and silver. I'm only going to highlight platinum and palladium because of we'll call it the failed EV transition here in the United States, right? We had Ford that rejiggered their fleet to be able to produce a whole lot of EVs, and now they're going back on it. So they're going back to producing ICEs. So over the course of the next, call it 6 months to a year, there's going to be a real step change in demand for platinum and palladium auto catalysts that most people didn't have in their forecasts. And
Because
I think
they're in engines. That's what.
What's that?
That's what they make the engines out of. Is that correct?
That's what they make the catalytic converters out of to reduce emissions.
Both platinum and palladium are used.
Yeah, so platinum generally in diesel engines, palladium generally in gasoline engines. But yeah, both of those, and keep in mind, we still have sanctions on Russia, who's a major supplier of platinum and palladium to the world through their, the sovereign company. Well, not sovereign, it's oligarch owned, but Norilsk.
Didn't know that.
Or Nornickel. So without that material coming into the market, I think platinum and palladium probably a space to watch. The easiest way to play it is just through the platinum and palladium trust. I don't necessarily like all the miners here at this point in time because of the cost inflation that I previously mentioned. But there are there are a couple sort of smaller cap companies that are pretty interesting. But mostly, like, you can just buy the metals, and I think sleep pretty well at night, knowing that they're going to appreciate in value here over the next 6 to 12 months.
So the trust you're talking about, PPLT and PALL.
Yeah, exactly. I think I prefer PPLT because you get a mix of both in Sprott, in the Sprott ETF. But yeah, that's both of those are perfectly fine to hold. I've held leveraged gold and silver ETFs for a long time at this point. Like I said before, when geopolitical tensions arise, I'm usually a seller rather than a buyer. Right. The problem isn't going away anytime soon. No. So it's one of these things where I think you can range trade it if that's sort of what floats your boat, or alternately just hold it because it's downside's pretty minimal. Relative to where I think government's going to push us to the upside.
I got to give it to Matt. Last year, even early last year, I think, when everyone was buying the inflation is coming down thesis, listening to the Fed, 7 rate cuts coming into this year, you were like, no, don't sleep on inflation. You've been spot on, and I guess you see it continuing. And that's good for commodity prices. So
it's good for everything. Let's if you want to beat inflation, the way to beat it is to be long the things that inflate, and ultimately that all of that inflation in commodities pushes through into small cap retail. It pushes through into everything that we touch, and ultimately that's it makes me more bullish for the back half of the year than bearish. I do think next couple of months probably we'll see a pullback, but I think the sell in May and go away crowd probably be surprised when we get into June and July.
Long inflationary assets. Heard it here.
That's right.
Sounds good.
Third time today I've heard that. All right, Matt Warder.
Thanks, Matt.
Always great. The chat was loving it. We got some very nice comments. His insight is over the top.
Don't worry, Matt will be back.
Well, hey, anytime you guys want me on, I'm happy to come on. Love talking to you guys, and good to see both of you.
And Matt, if there's a silver lining at all to the horrible thing with the bridge, it's that it inspired me to rewatch The Wire. So
that's right. The thing that I'd sort of take away, that's optimistic about this is, we're going to get the shipping channels rejiggered, and this is bullish steel demand. I think it takes a lot of events like this to kind of pull communities and countries and all those sorts of things together. Yeah. So it's like we get closer through adversity. We don't get closer through success and stuff like that. Agreed. So looking to see Baltimore, long and strong Baltimore. I think through the next decade. Bullish steel demand.
Definitely bullish Baltimore as well. Thanks a lot, Matt.
No problem, guys. Catch you later.
All right.
Bullish things that inflate. Bullish Baltimore. Bullish building bridges. All right.
Mm-hmm.
I love it. I feel inspired after talking to Matt Warder.
Likewise. Hey, speaking of gold, before I forget, All Star Charts is doing a gold live event on Tuesday.
Never done that before.
What?
No, we love our gold live events. I'm excited.
We do love it. Yeah. So the link to register and get the page to watch it is in the chat. I'm going to throw it on the screen right now via a QR code if you want to register that way, but it's totally free. Again, Tuesday at 2 p.m. Eastern time.
We will price gold in every currency for you.
Yeah, it's going to be like an hour long of nothing but precious metals and mining stocks and what we think about them and how we plan on making money off it.
So
and when I say we, I mean
so older professionals treat gold or precious metals or at least treated it as its own asset class, right? Like it's not uncommon to see gold on a macro watch list, with crude oil and the S&P 500 and interest rates and everything else in the dollar, right? This used to be a huge area of analysis, particularly in the technical community too. So the tools that we have, the intermarket charts and relationships that we're looking at, the amount of data that we have, we're going back, century and looking at these trends, studying things like minor outperformance, silver leadership, right? What the dollar is doing, what real rates are doing, right? We have all of these technical tools to help us navigate the world of precious metals, and there is a lot. So we really love digging into it and doing these special reports every so often. And right now, is as good of a time as any. This is a massive, massive, massive consolidation pattern breakout in gold right now. And silver hasn't even got it done yet. So I think it's coming with silver. Matt over here saying, these bullish things about platinum and palladium. So there's really a ton to talk about in this group right now.
Yeah, and credit to Matt, credit to people like Ian Cully who've been on this one. It wasn't like they just got here, right? Like they've been on this for
years, dude.
Over a year. Years.
No. 3 years. 4 years.
Yeah.
Coming off the pandemic lows.
Yeah.
JC we were joking about it when crude smashed into negative territory that day. We were like, wouldn't this just be a perfect bottom? Perfect place for a new bull market to start. So.
Oh, you know what's funny? I think the anniversary of the U.S. abandoning the gold standard was like yesterday.
Mm-hmm.
I think. One of these days. It was definitely it was like around this time in the 1930s or something.
I don't know if Jason is still in the chat, but we were joking on his show months ago. I forget what it is. I said I want a crisis with my bottoms, right? Basically, you want sentiment to just blow out in the most negative way, right? Bitcoin, Sam Bankman-Fried, FTX, bottom, right? The banks blowing up, regional banking crisis, bankrupt, bottom, right? With crude oil, you got that in the most beautiful way ever, right? Crude oil trades negative. Everybody's freaking out, bottom. When you look back, it's so obvious. It's never obvious or easy in the moment, though. But events like that really tend to correspond well with major inflection points and market reversals.
Yeah, I was thinking about the sentiment washout in Facebook or Meta, right? It was like this company's over. This company is dead. Yep. Facebook is not growing. They're throwing all their money away at this stupid metaverse thing, and right. that was a year and a half ago, 2 years ago.
Facebook and Google. Oh no, maybe not Facebook. Amazon and Google are now making their own chips or trying to make their own chips in-house. That's what the demand is like out there for these things. NVIDIA is selling them for 30, 40,000. They just came out with a new one that's even better than the H100 or whatever.
I
know. 30, 40 grand. And these guys are so big. We talked about this at the start of the AI super cycle over a year ago, that it was going to be the big boys who really were able to compete and make the most of, this new market. They're making their own chips in-house because they can, right? Just to beef up. Imagine the power NVIDIA has if you got to go to them as the gatekeeper. A really interesting article. Did you see it today in the Wall Street Journal?
No. About NVIDIA or about making their own chips?
Just about how NVIDIA is not going to be the only one who wins from this.
What, like AMD? Qualcomm?
Yeah, I'll read you off who they mentioned. Can't find it now. You want to talk about earnings while I find it?
Not really. But speaking of articles in the Wall Street Journal, they always They always send like once a week. They send like a weird. You must have a quota. Like once a week, we have to send a notification for like a weird fucking article. And Sunday night, it was a push notification about loading the dishwasher correctly. I don't know if you saw that. If you got that one, it was an entire article about how married couples can't agree on how to load the dishwasher. I was like, what the hell?
So stupid.
Why did I even open this? Usually it's on a Sunday
They
too.
have some good stuff though. Every now
That
and
must be
then.
their Sunday
Like,
their Sunday night thing.
they sent me something about like workouts you should do for golf the other day. I'm always reading interesting stuff about the housing market. Wall Street Journal does a nice job. Oh, really, they do.
Hey, I'm a fan. I just thought the
Parets, too.
dishwasher thing was a little bit weird. Okay, before we bring Sean on and talk more field breakouts, let's just do a quick look at where things are shaping up. We're unchanged. It's quiet. The major indexes, Qs are down. Russell leading the way today. Russell and Dow leading the way. Look at that. SPY flat. Crypto still, maintaining its trend from the morning. Look at oil. Green oil. Gold barely in the green there, but it is in the green. Sector is mostly all green, just tech and communication. Lagging so far today. As far as headlines are concerned, there was a Tesla Cybertruck recall, like an actual recall. Sometimes when Tesla has a recall, it's not really a recall because it's just an over-the-air software update. This is actually like a physical recall because I guess the pedals are getting stuck or something. So got to fix that. Tesla down 0.5% today. What else? That's pretty much it. I was looking at Japan this morning. Yeah. Not good, man. Not good.
What's not good about it?
Just a
What don't you like?
nice correction. Like a really solid, not weak correction.
Where'd it happen?
Where?
Logical level, maybe?
Yeah, or thereabouts, somewhere in the neighborhood of one. Yeah. Haven't been able to figure out why Li Auto is down 7% today. If anyone has a reason, I'd be interested to hear it. It's underperforming as China as a whole, so don't know. Super Micro down 7% again. Yeesh. Thing. Yeah. Anyway, that's pretty much what I got.
Bring Sean on.
Well, Sean's not going to come on next week, so we might as well have him on twice in 1 week. Let's do it.
What's happening, boys?
Hello, Sean.
I went to bed last night, and S&P futures were down like 80 handles, and I was like, "Whoa, it's gonna be exciting tomorrow!" And then I wake up today, and they're flat. I was like, "Whoa, what a whipsaw!"
Yeah, really paring back those losses. Let's see if it can hold. I think that'd be super
as you know, I don't read the news, but I did catch a headline that there was some war stuff. Did it turn out to be a non-event? Like, was it bullshit or?
No, it was an event. It was real.
This was the retaliation from.
Yeah.
Well, because when I went to bed, the news headline I saw was that there was rumors of explosions, but nothing confirmed. So I was like, okay, I don't know. Maybe this is all BS.
It was confirmed. Confirmation.
Okay, all right.
Wasn't it like they struck Israel and Israel striking back? Isn't that what's going on here, right? Ultimately?
Yeah.
No? Okay.
Listen to us, war experts.
All right. So, Sean.
Hey.
Yeah.
Oh, I had a quick question here. Since you were talking about metals a minute ago, in the All Star Options chat room, some guys were asking about Sibanye, SBSW, asking if we have a feel on this thing. I know that we talked about this stock not too long ago internally.
Yeah, but it was trading 15 points higher, around $20. It's at $5 today. This is such a bad chart. I know somebody keeps asking about it, but it's not good. That's why they're not about it.
Didn't we talk about it internally a couple of weeks ago, and we kicked around an idea, and I just don't remember why we didn't put the trade on.
I
I don't
think
remember.
because it's such a nasty downtrend. I think. Yeah,
I mean, generally these are not the types of charts I like to be a buyer in. Doesn't mean they can't work. It's just I'd rather let somebody else turn the ship, and then I'll jump in when the trend has begun.
Yeah, look, I mean, this stock should do well in this environment, but we got to see
And
it.
it hasn't.
Yeah, we'll be interested if and when it proves itself. For now, there are other vehicles and more every day, right? Particularly from precious metals and now industrial metals that are looking better and better. Aluminum stocks, rising to the top of our scans. Matt's talking about maybe a comeback from coal. So there's other stuff to do in the world of commodities. You don't got to buy these crap-looking downtrends. But Sean, yesterday we were talking about a big bank. So it's Crypto Friday, but I want to talk about TradFi. Why is it that Wells Fargo was one of just 2 stocks in the S&P 500 making new highs?
That chart is just it's frustrating me. Oh, I'm winning in this trade because I have a trade on that you and I got into back in January that's still working, and that's great. But last week we did a little add-on trade, a little tactical bet, betting on this very breakout that's happening right now. But the breakout happened 3 days later. Like, we thought this would happen immediately following earnings.
Yeah.
Unfortunately,
it went, paused, and then went.
Yeah, I listen. I had a plan going in that if my calls that I bought, we bought the May 60 calls for a tactical quick run for this type of move right here,
which was the right contract.
Right, it was the perfect contract.
You're out at double now. Yeah,
but my rules were, at least for me, that if the call following earnings, if the calls lost half of their value, that's my line in the sand. I'm going to take them off. And they did exactly that on the 16th when they were pulling down. I'm like, all right, time to get out. And of course, now we get the delayed reaction. So I'm a little frustrated, a little annoyed by that. Thankfully, I'm being assuaged. Is that the right word? Assuaged by the fact that our other Wells Fargo trade that we've been in since January is still working nicely. So not a total miss here.
So I waited. I wanted to wait for the breakout. I didn't get in after we discussed it. But then I'm over here on the morning show the other day trying to chase it, and I got filled on like less than half of what I wanted to be filled on. So now I got a little piker position, and I guess like you, better than nothing. But when these things go, they go. And if you play them through some short-dated calls like the Mays that we talked about, slightly out of the money, you get your double in a day, right? So you're out of half. You got your free ride. When you look back now, I mean, I wish I managed myself in better. Do you think you kept it too tight, or rules are rules? This shit happens.
I don't think I kept it too tight. I mean, we were betting on that flag, right? That flag was getting tight. The consolidation was tight. And I mean, if you erase the last 2 trading days, today and yesterday's candle, right? And you look at that flag and you're like, oh, when it broke below, 56 and a quarter, like that felt like, all right, this flag is breaking to the downside. That's no good. I wouldn't want to be in that stock anymore. And that's exactly what happened. It shook us out. We were victim, or at least I was a victim of a shakeout. It happens all the time. I'm not immune to shakeouts. Neither are you.
So here, let's just so everybody could see it. I'm highlighting the shakeout here. And it was like the perfect shake too. This is exactly how you want them. Real quick and dirty. To take you right out, and then you get the resolution literally in 2 days of follow through.
Well, and also I should point out, Strazza, that a reason the risk management was so tight is because we had very little time until expiration, right? These are May options. Theta, if you're holding out of the money options as you get inside a month expiration, Theta really becomes your enemy. So you got to be quick, and your timing's got to be a little bit more perfect. And any shakeout, any breakdown, I'm like, okay, all right, the clock is ticking, man. It's time to go. 8 times out of 10, that's the right move. This time it wasn't. That's just the way it works.
Yeah, there it is. Look at that.
Look at that. Oh man, and such a beautiful flag.
It really stood out too. There were no new highs as this thing's breaking out. It was literally like we went and looked in the Russell 3000. There were like 4 new highs that day. In the S&P 500, there were like 2 new highs. This thing's breaking out. It really, really stands out when you can, resolve from a pattern like this in a tape where we're just bombarded by new lows and no new highs. So good for Wells Fargo, trying to tell us something. If the market finally finds its footing and turns around here, if you zoom out on this chart, they're pushing right up against prior cycle highs and a massive breakout. This could be, joining the leagues of leaders with, JP Morgan and Berkshire within financials. So,
Well,
I don't.
as frustrating as this situation is for me, I have to take solace in the fact that I'm also long the January 60 calls that I bought for $1.75, and those are working pretty well here. So
How many trades on one stock do you have?
what's that?
do that. It's great. Spread the love.
How many trades on one stock do you have at the same time?
Did you have rules against that?
I rarely will do add-on trades like this, Spencer. I generally put a trade on and I stick with it, and that's it. But man, me and Strazza were watching this Wells Fargo, and like, this just is a classic. You got to buy this. So you just, you got to buy it, whether you're positioned or not. You have to add to it. But it's not something I do a whole lot, Spencer.
Somebody's asking in the chat, do we have opinions on these cybersecurity names? Listen, I dipped my toes in Palo Alto the other day. I've been wanting to get into this one for a while. I'm long CrowdStrike, so I like these cyber names, particularly the leaders.
Don't get them started on Palantir.
I mean,
I like Palantir too. It's got to work better.
I've been long the CIBR for a minute now, and I don't intend to sell.
Yeah.
This is a longer term thing for me. But
isn't war supposed to be good for these stocks? Can somebody tell these cyber stocks that we have wars going on and missiles being launched? Jeez.
I don't know if physical real world war.
War ain't what it used to be.
Hey guys. You notice how nobody's come on here talking about cannabis stocks for the past few weeks? Tilray, Canopy.
I mean, I keep an eye on them, so there's nothing to talk about.
40-50% drawdowns, these names. Didn't take long. God, talk about dead cat bounce. So pot stocks still suck. No news there.
I mean,
how perfect is it that pot as a investment, as a strategy, as an industry just can't get out of bed? I mean, how perfect is that?
It's ironic. It's ironic to say that.
This weekend, I'm going to do some much needed soundboard maintenance. If I had my new, I would have played it there, but I don't have it.
Pot stocks are the only ones that can't get high in the bull market.
Oh, the irony.
All right. Let's do some recess.
You done with us? Had enough of me today?
Well, what else is there? Actually, you know what's funny?
I didn't get to go through my failed breakouts. I never even get to talk about what I want to talk about, even when it's my own show.
Breakouts.
No, let's talk about the failed breakouts. You got a couple charts? Let's see them. I want to see them.
Let's do it. Failed breakout.
All right.
Bonds and I are working on a post. They're everywhere. It's one of those times where you want to make a list. Let's go right on down. Equal weight S&P 500. Back in the box, below the prior cycle highs. Next, equal weight NASDAQ. Same story, looks even worse. You don't want to see momentum start to get oversold on these charts, right? Not a characteristic of bull markets, at least not the best ones. Next chart. This is just terrible. So the average stock, to me, Russell 2000 is a great representation of what most stocks look like. Still range bound, still trendless, still messy. You're getting chopped up out there. Never got overbought this year either. So unconfirmed breakout. Momentum was the tell there in the lower pane. Next chart, value line, same thing. This literally is the average stock or the median stock. Don't want to see this one get oversold. Next. Financials, back in the box. While Wells Fargo's breaking out, mind you. Next chart.
That right there is pretty interesting, that XLF chart.
And then we can go to every sector and show you examples below the surface at the end, or at least at the industry group level, of similar chart patterns. Broker dealers never got the breakout, failing at a key level at the prior cycle highs. Let's do, materials next. Oh, healthcare, back in the box. Medical devices look a lot like small caps, back into their old range. Never made new highs. Next.
So
materials.
I have something to say. So
are you noticing
we started the
yes.
Yeah, we started the show talking about failed tops, and we're going to end it talking about failed breakouts. Is this what they call a stock picker's market?
You want the short-term tops that are not completing. And if you can find a short-term top that's digging in and failing at prior cycle highs, think of that chart of Intuitive Surgical. That's fantastic. That's really what you want, right? And they are out there. I'm not saying that some of these short-term tops aren't for now looking to be completing. You just want the ones that aren't yet. So
Strazza, I'm no macro fundamentalist, as you know, but looking at all these charts you just shared, all these failed breakouts, I mean, we might come back and look at these, say, 6 months from now and say, this is where the market finally realized that, oh, yeah, the Fed's next move is to raise interest rates, not cut interest rates. And I've been pounding the table on that for 4 months now, haven't I?
I'm so with you that they could probably do another 25, 50, right? And it might even be the right move. They're not going to do it. They're not, because
they should do it. But yeah, it's a presidential election season. Yeah, they're probably not going to do it, but they should.
Yeah, but a lack of a cut is a hike, right?
Yes. So that's what you're getting. You're getting de facto hikes, right? By peeling back expectations from 7 cuts to 0, those are de facto hikes. Look at interest rates, right? Will they actually come out and give us another 25, 50 basis points? I think that'd be a lot for the market to handle.
I would love it if they did that. Love it.
That would be the biggest troll ever.
I just don't understand. I don't understand how these people, these prognosticators, these people who are Fed watchers and make these predictions that there's going to be 6 cuts. Like, how do you make that leap and make that just that guess that there's going to be 6 cuts? Why not just say the next move is a cut? Why say there's going to be 6 cuts? Like,
I agree, Sean.
So stupid.
It's not people. It's the Fed funds futures market.
But that's made up by people, Spencer. People are making those prices happen.
Yes, and there's a dot plot made by the Fed, right? That those people are following and listening to, and that's really what it was. The Fed started baking in to their dot plot, which is the future, where rates will be in the future, that we were going to go a lot lower this year, and the market just kind of listened, and Fed fund futures started to reflect it, and now they're paring that back. I mean, boy, was the market offsides coming into this year. Whether we get a hike or not, I don't know. Let me finish my spiel quick.
7.
Finish my spiel.
7 cuts in the year.
Back to, what is it? COPEX? No? Did we do COPEX? Anyway, copper miner. Yeah, natural resources failing. Back in the box. Energy holding on, though. Can you do energy next? Energy kind of holding on. Like, we'll see.
Holding on right where you want it to hold on, too, which is perfect.
Right. So energy at the top of the list of ones that we can get involved in here. And then Bitcoin. Bitcoin's a stock, too, in my mind. So let's zoom out. Oh, yeah, international. We'll get there. Bitcoin at the prior cycle highs. If this is a failed top all day, love it here. What a big level. And then this is not just happening stateside or here in our domestic equity markets, but France, Spain. You can take a trip around the world. We're seeing similar action. You don't want to see these breakouts come undone. You don't want to see bears take control at these prior cycle highs. This doesn't mean the bull market is over, but it does mean that we should be prepared for further and deeper corrective action, at least for now, until this damage is repaired. So these are some of the charts that we have our eyes on right now. There'll be a post on the blog shortly.
All right. Good stuff, Steve. Let's do some recess now and get out of here.
Hit the button, Spencer.
Man.
I'm trying. Wait, did it not hit? What the hell? What's going on here?
So, Strazza, you'll appreciate this. Here's my recess. I introduced you on our trip to Asia last.
Spencer,
what was that? What happened? Jeez. JC takes a sick day and the whole thing falls apart.
We can't come fast enough. All right, trip to Asia. Talk to me, because I had an Asia moment the other morning. I texted you when I got up.
Yeah, you did. All right, so you'll appreciate this. On last summer's trip to Asia, I introduced you to the world of airport lounges, right?
Oh my God.
Well, now I mentioned yesterday how I'm taking my...
You can't get in there with your Venmo credit card, Spencer.
No. So I'm taking my son to the Redwood National Forest next week. We're flying out there. And the one thing that my son said that he's looking forward to, he can't wait. He's like, I want to go before the plane. I want to go to the buffet.
That's awesome.
And that's what he thinks the lounge is. He calls it the buffet. He wants to go and have, because he wants to eat all the cookies and eat all the snacks. And he's
all those phone calls you made home from the airport lounges back in July. He remembers. No, so the lounges were so good to us, and we were constantly every couple of days back in the airport that we literally looked forward to our time in the lounge. I think our WhatsApp group chat was the Lounge Babies. We took on the name. That was our band. We were the Lounge Babies. So, that was,
I mean, look, as great as that trip was, I mean, we don't want to minimize it, but we always did look forward to hitting those airport lounges because there was great food. It was air conditioned, which was very important. Air conditioned, and some of them we got massages at. I mean, it's unbelievable.
The lounges they're different out there.
They're different in Asia for sure.
Yeah. So
I think we've reached peak lounge at this point. I mean, if you guys are in the lounge, I mean, they used to be exclusive.
I know. If we're in the lounge, it's jump the shark. That's for sure.
No, there's a good
man. Sell the lounges.
I mean, Sean figured it out.
Hey.
Sean knows exactly what to do. He's good to travel with. Joey, 2 times to answer your question. The tea time is 2:00 today, and I'm already antsy about it. Playing in the
So you
tournament.
got golf today?
That's a great name, Joey. 2 times.
I think best ball tournament. Yeah, so that'll be fun.
All right,
Well,
my recess.
I don't know if you can see it, but it's snowing out my window today. So
really?
no golf for me.
April snow. Wow.
Oh yeah, Colorado, baby.
Wow. Who knew?
All right, my recess is beginning tonight and then going until Wednesday. We are playing host to my wife's family, sister-in-law and in-laws coming into town for the weekend and then for Jewish holiday next week. So wish me luck. Well,
You're gonna need it.
Yep, we are hosting the first night of what is essentially Jewish Thanksgiving on Monday night. It's kind of a big deal.
And this is your new house, so everybody's excited to see it, right?
Yeah, no one's been here yet. We haven't hosted anyone since we moved a few months ago. So pray for me, everyone. It'll be good.
You can do it, Spencer.
Good luck to you. And Sean, enjoy your trip.
Thanks, buddy.
All right. That's it for us. It is Friday. Actually, you know what? Before we go, I want to plug something.
Plug
in
away.
a couple hours, I think noon is what we said. We're going to be going live on YouTube with a new show that Sean and Steve have been working on.
In secret.
This is today. We're doing this.
We're doing it today. The original impetus for the show was that it'd be a podcast. It's still going to be a podcast. The podcast version, I don't think will be live today, but the video version will be live today. It's called Off the Charts. It's going to go up at noon Eastern time right here on the channel. It's Steve, it's Sean, and it's a guest of their own choosing talking about everything except for the charts. Hence the title, Off the Charts. Clever.
No
right?
charts allowed. The first episode, I think, is going to be just so fantastic. Really, everybody check it out. We had Jay Woods, who Sean calls the most popular man on Wall Street because it's true.
Oh, he is.
On the show, and he talks about, from getting lunch on the floor of New York Stock Exchange as an intern early in his career to making a market in airline stocks on 9/11 when the planes hit the towers to, what it was like to be on the floor during the financial crisis and more. So the stories from Jay Woods are just, as good as it gets in the world of finance. So excited for the show.
And to finish what Spencer said, the audio version, traditional podcast, will come out a little bit later. We got to get this set up. The video version, which drops today, that's the sexy version.
Yeah, if you're just dying to see our handsome faces, go check it out on YouTube.
If you're more of a podcast person, check back next week. If you're a video person, be here at noon. That's what we've got today. Thanks to our guest, Matt Warder. Thanks to Louis Sykes. Thanks to Sean. Thanks to all of you in the chat for hanging out. We appreciate you as always. If you want to do me a quick favor and just hit the little thumbs up button on the YouTube, I would appreciate that. And it does help us. It helps more people find us on YouTube, which we always like. And that's what we got. Go make some money. Have a good one. Have a good weekend. We'll see you later.
Take care.
Happy Friday.
Run it. I can't take no loss. I don't even know what it costs.